The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Good morning, everyone, and welcome to Squawk Box. Here are your headlines today. IMF Managing Director Kristalina Georgieva tells CNBC exclusively Europe is on the right path but must seize the opportunity of the single market or risk losing out.
Europe looks like an ideas supermarket for the United States. A lot what is invented here ends up being commercially viable and on scale over there. And when you look at the main obstacle, 27 countries not yet integrated in a single market.
The Nasdaq snaps its longest winning streak of the year as Nvidia shares reverse course, but US stocks still eye a positive week with energy leading gains.
The Bank of England opening the door for an August rate cut after keeping rates on hold in a finally balanced decision. And the outgoing Dutch Prime Minister Mark Rutte clears the final hurdle in the race for NATO's top job after his only remaining rival withdraws his bid.
Interview yesterday with Kristalina Georgieva over at the IMF. I think there's been a lot of warnings that we know about already, but they really come to the fore as we talk about what's transpiring in 2024. To give you an example, for instance, the IMF's been warning about fiscal budgets and having fiscal buffers for a long time. And you think about this year and why it gets interesting in France as an example. You've got the far right now talking about big tax cuts, deep investments. How does the fiscal position look in France on the back of that when they can't already balance the books under a slightly more conservative position with Macron? So you've got to imagine that gets more challenging. But clearly the IMF very keen to steer away from any comments on how voters should vote up in the upcoming election. But, you know, that warning is there. Talk about decoupling. This has been something that the IMF's also warned about. And you've got the Europeans going down the pathway of trade tariffs against the Chinese on EVs. But of course, there is that other nuanced position where you need to protect the single market, ensure that it's on the right pathway. And how do you do that if you're not correcting so-called market distortions? So I think there's a lot of difficulty here for the IMF trying to push forward messages about how to run economies without getting too deep into the politics.
Yeah. I mean, I haven't listened. I'm looking forward to listening to. You know, we've got lots of sound coming up on your Georgieva interview, but already I can tell you I disagree with her from the first headline. I think it's wrong for the IMF to be quite glib about Europe being on the right path. Europe is clearly not on the right path. Europe is struggling aggressively in its global competitive position, in its growth position, and as she mentioned in that sound there as well, Europe's ability to foster these big thematic trends and create behemoths on the scale of China, elsewhere in Asia, the United States, elsewhere in South America. Like every other region seems to get these smaller companies and turn them into very, very big companies. Europe is not on the right path. So even already straight away, I find myself in disagreement with Georgieva.
One of the problems as we talk about more Europe, more integration, is how do you get this to accelerate from here? It feels as though you've got a little bit more lockstep around trying to get banking union, for instance, which has taken a long time to achieve, capital markets union. But now you've got populists coming to the fore in various different countries. And already I know that you've got, say, for instance, the Germans. When I spoke to Christian Lindner earlier this year, he was pushing back against the idea of joint European projects. Can you imagine those joint European projects if there's a change of government in France, so that the Germans would be willing to underwrite those joint projects with saying. Marine Le Pen's party in power? How does that happen?
Let's be very clear. Populists on the streets of Paris or elsewhere in Europe don't really understand CMU, and they don't really understand banking union, and they don't really understand telecoms regulation. And I know that for a fact because we struggle to understand some of these factors, and we do it day in, day out. It's not the populists on the streets of Paris or Berlin or Rome or wherever it may well be who are anti these things. It is the governments in these countries who are anti those things as well. It is the governments who are balking at more banking union, at capital markets union, at better telecoms regulation.
Yes.
And you have spent a lot of your year basically handing out the Kleenex to these leaders in the telecoms industry who are just crying over the regulatory environment in Europe as well. It is not the populace on the street who are balking at this. It is the governments of these countries who are balking at it.
And other tissue boxes are available too, other tissue brands.
And these aren't Kleenex, I believe. Oh, no, they are. Sorry.
I think there's some cheeky panda brand around as well. Well, let's push on to the sun. The IMF's Kristalina Georgieva has hailed the Eurozone's improving economic performance and success in bringing down inflation, but warns there is no time to waste when it comes to boosting innovation and productivity in an ever more competitive global landscape. The fund expects growth in the region to pick up this year and next, particularly as the ECB unwinds its tight monetary policy stance. But it urged member states to embark on greater integration to meet their goals on climate, digitalisation and productivity. I caught up exclusively with Kristalina Georgieva and started by asking her whether Europe is now finally on a clear growth path.
What we are seeing is inflation is receding, and that allows ECB to start rate cutting, good for both investments and for consumers in the EU. Economic performance is strengthening. We project growth this year twice the level of last year. From 0.4 we go to 0.8%, and then we project doubling this for next year, 1.5%. What is very important is that at the same time, the euro area is now focusing on critical questions for the future. Among them, number one, how to lift up productivity at par with competitors, especially with the US.
Let me bring up the inflation question too, because the ECB, like other central banks, concerned still that perhaps restrictive policy has not done enough to target inflation, still concerned about a pickup in the numbers from here and whether geopolitics also gets in the way. What is the risk here that we still have not seen enough work to tame inflation versus the broader risk if we don't see further interest rate cuts and then we undermine the growth story?
It will be necessary for ECB to continue to carefully monitor incoming data, and they will continue to take decisions meeting by meeting. But what we observe is that while indeed there has been some setback here in other places, the trajectory clearly is downwards, and we think that getting to the terminal rate of 2.5% is in sight. In our projections, we anticipate more cuts this year and next year, and that is based on the fact that even services inflation, which has been tougher to bring down, is starting to cooling off. Of course, we live at a time when the economy is impacted more than usual by political and geopolitical factors. They have to be carefully observed. But globally, the picture is better than we feared a year ago. And that also translates in better conditions for recovery in the EU.
Georgieva also said it's time for Europe to get serious about competing with the United States.
When you compare Europe to the United States today, what is the big difference? The big difference is the US is more innovative, it is one market, it is one economy, and it is performing way better than the Eurozone. Just look at the growth rates. We project 2.7% growth in the US versus 0.8% in Europe. So time is to get very serious about Europe's future, an aging area, but one where we still enjoy creative people, highly educated, capacity to do better. And politicians will have that very important task, carry people with you for the good of Europe, for the strength of Europe.
See, once again, I find myself disagreeing vehemently with parts of what... I mean, look, she's far more eminent than me in many ways, but That thing she just said there, I've got the transcript in front of me. The big difference is the US is more innovative. It is one market, it is one economy. Yes, unarguable, one market, one economy. So 2 out of 3 ain't bad, as the song goes. But they're not more innovative. The innovation out of Europe is phenomenal. The problem is we don't back our early startups the way Americans do. We don't provide the capital, your point to CMU, as quickly and as aggressively. We're not as brave enough backing our ideas as well. That is the European problem. We're just as innovative. Look at the amazing inventions that or concepts that have come out of the amazing lycées in France, out of Imperial College in the United Kingdom, out of Cambridge in the Fens. You know, there's some phenomenal innovation.
I hear that there is good innovation. We certainly see it in terms of some of these small startups. But at this stage, you think about AI, where are the biggest companies in the world? They're in the United States that are conquering the AI story. So, you know, to Georgieva's point,
their startups.
But are they also more innovative because you've got that march towards achieving a goal and they're getting there first?
I think there's some stunning innovation in Europe. We just don't back it. We are looking back on a super Thursday of rate decisions across Europe. The Swiss National Bank cut rates for a second straight meeting on this very show yesterday and lowered, well, they didn't just do it on this show, they did it elsewhere to be fair, and lowered its inflation forecast by a mighty 0.1%, I should add. Now seeing inflation falling from 1.3% this year to 1%. This year to 1% over 2026. Yeah, but that's not the scale of the decline. Anyway, the S&P chair, Thomas Jordan, told CNBC he's not concerned by divergence with the ECB.
We take our decisions always with respect to the inflationary outlook in Switzerland. Of course, the international environment has a big influence. We are a small, open economy. So what happens in the big economic areas may have an impact on exchange rate, but also on global demand. That could have an impact then on Switzerland. But we take our decisions with the ambition to maintain price stability in Switzerland. And from time to time, you can have also a divergence between monetary policies elsewhere. So this is not a necessity to follow exactly the same policy, but we have the necessity to take the right decisions that then maintain price stability in Switzerland.
You just love a hawkish pause. Hey, we're on spot. Well, that's what the Norges Bank did. They said they expect rates to remain on hold through the rest of the year, after previously forecasting a first cut in September. The governor, Ida Woldenbacher, told CNBC the central bank sees stickier price pressures ahead.
The broad picture is that inflation has come down significantly from the peak, but it's still running above our target. And we see with a significant rise in business costs that there is risk that inflation will remain elevated and for longer than we envisaged previously. And this is also the reason why we think it will be necessary to keep policy rates and to keep a tight monetary policy stance for longer than previously envisaged.
And the Bank of England also kept rates on hold. It was a 7-2. I personally thought there might be a 6-3 in there, but it was a 7-2 vote, unchanged from the central bank's May meeting. Traders, though, pared back future rate expectations after minutes from the MPC meeting showed some members saw the decision on whether or not to cut rates as, quote, finally balanced. How you could trade on finely balanced, I don't know. Anyway, the committee's statement stressed the importance of fresh forecasts at the bank's August meeting, leaving markets split almost 50-50 on whether that meeting could generate the first BOE cut. Karen, US markets absolutely fascinating.
Yeah, we saw the Nvidia story come on stock for some investors. A bit of selling, bit of profit taking. So that stock was down about 3.5%, tumbling back underneath Microsoft's market cap as the two changed hands in terms of the biggest listed company. But the Nasdaq, as a result of those falls in Nvidia, also in reverse, so snapping what has been a very long winning streak. So it's been about 7 straight days of gain. So snapping that and tilting lower by 140 points at 0.8%. So a weaker session there, but also for the S&P 500, given that failed by Nvidia in session. But keep in mind, this is a stock that's been on a huge run. So a slight pullback of just over 3%, not doing much to impact the stock over the course of this year. The Dow performance, that's been interesting because the Dow actually broke the range, and you can see actually trading high versus the red we saw on the S&P and the Nasdaq. And now for the trading week, actually positive to the tune of 1.4%, outperforming outperforming the S&P and the Nasdaq. One of the big concerns for the market has been this all-important trade around technology in light of the fact that we're still not getting clues of any imminent interest rate cuts in the United States. There's still been a single focus on the big technology group of names. But yesterday, it seemed that was a little bit the opposite story. So the Dow was supported. Those big US tech and Nvidia stocks, if you can take a look, you can see Nvidia down that 3.5%. Apple going with it, down more than 2%. Some selling in Microsoft and Tesla, but a couple of patches of green. AMD in particular, 4.6%. We've got Meta stock also rallying. The Asian markets, the early trade across the region, somewhat mixed. We've got flat performance out of Tokyo. Stocks are going absolutely nowhere for the Friday session, but we've got a fairly steep fall on the Hong Kong market, giving back territory more than 300 odd points to the downside, holding the 18,000 point line, modestly down on Chinese stocks, but modestly firmer on Australia. So real mixed bag across the region, Steve.
Yes, and so many interesting things in what you just said. In the week-to-date moves in the Dow and the S&P, managing that rally without tech, and I think that's fascinating. Hey, let's get to Ozan Özkural, who is the founding managing partner at Tanto Capital Markets, partners, I beg pardon, and joins us. How are you?
I'm very well, thank you.
I know you've been travelling. I'll come to that. I'm super, because I get to work with smart people and take my mild intellect to a better level, hopefully. Now, look, you've made the absolutely key point for a lot of our viewers is that the disparity between US valuations and European valuations, albeit this week slightly reversed, but by and large is widening. It's a trend that we talked a lot about in 2023 and people got very excited at the start of this year. Let's get into Europe. Let's get into Europe. And now I see something fascinating happening. I see, obviously, two groups of people who are making a market. The ones who are saying Europe is a basket case because of all the reasons that are going on, plus the politics sprinkled in. Let's pull back. Let's go to neutral. Let's go underweight and just go where it's safe in the US. And the others who are saying, and we had one around this desk yesterday, said, Europe, the valuation discount has expanded. Let's fill our boots. Where are you, sir?
I am risk on US. And I just think that going back to your earlier discussion about innovation takes place, yes, in Europe, but where does it actually mature?
Yeah.
It matures in the US. I mean, US is the land of the go big or go home. And even though we have great ideas, Europe has great ideas, the big boxes in the US, market dynamics are much more conducive in the US, Nvidias of this world come out in the US. And therefore, I think it's a mindset issue, Steve. I think it's a mindset issue combined with incredible capital markets. And by the way, I do think that given the kind of geopolitical headwinds that we are facing and we are likely to face going forward, US is the better protected landscape compared to Europe. And Europe has a lot of structural issues.
Got it. My sycophancy is at new levels. I agree with everything you just said. But is it in the price?
Right. So, not necessarily. And I think this is a portfolio game. Right. So would I go and invest in certain European companies as in a portfolio basis? Absolutely. Again, ASMLs of this world, potentially. But looking at the growth prospects, my portfolio would be more heavily skewed towards US equities than European equities on the whole. I think Europe is going to face a lot of challenges. Doesn't mean that they will not be able to go over these challenges.
Sorry, Ozan, I again, yeah, we know this, but is it in the price?
I don't think so.
Right. Okay.
I just want to pull out some stats. I was looking at an article that was talking about whether Nvidia poses a challenge for the markets thanks to the Wall Street Journal. I think we've all been talking about Nvidia and this enormous growth trajectory we've seen in the stock price this year, and we know it's very much underpinned the story on the S&P and the Nasdaq. But these stats, the average stock is about where it was at the start of 2022. On the S&P 500. I know some fund managers are looking for breadth, but is that coming anytime soon, or is there a real problem now that Nvidia has escalated so far? If it falls back at all, it takes with it the broader market.
I think that's a great question, and I think we cannot ignore how important Nvidia and the Mac 7 is for the markets right now. I think everyone is kind of invested in these stocks, and that has a self-fulfilling prophecy of sorts for the market. At the same time, I think it is time for portfolio managers to take a closer look at differentiating between different tech companies. I think particularly Nvidia has a unique story. Yes, strong earnings, yes, beating forecasts, But if you look at the kind of world that we are going to be living in the future, I don't think the market has priced in a optimistic AI scenario yet vis-a-vis Nvidia and AI stocks. I think we are somewhere in the Goldilocks to kind of middling place right now. But at the same time, the whole market is so interdependent and almost held by a linchpin, which is the stock that is Nvidia. So it definitely is risky.
So what do you do? Because if the market is saying, look for some breadth to come back in at some stage, is that just predicated on the Fed cutting rates at some point, or is it around the broader AI story actually bringing some rewards for other companies beyond a handful of names?
I think the broader macro is important. So Fed, yes, will be looking to cut interest rates, although the guidance is only one. But at the same time, if you look at the broader macro, the historical low unemployment rates, the great output growth, consumer resilience in the US, I think the market has enough good news to look at pricing stocks. Although I have to say that I think investors are so desperate to buy into any positive news that I think in the second half of the year it will be a bit more volatile, a bit more real, and therefore we'll have more, although a benign macro backdrop, more volatility for investors to sit back and think, hold on, is this overpriced?
My oldest friend at CNBC is Rodway, and he said to me, I can have one more question. He's the director. You've just come back from Italy. What did you learn?
I learned that Venice has an incredible over-tourism issue. And by the way, joke aside, Italy is one of those countries that is a amalgamation of Western European dynamics with the resilience of emerging market entrepreneurs. And it always surprises me and shows me the importance of being able to have a great SME market where families are involved, where resilience is really baked into the system. Yeah. And that is very important, and that is going to be very important.
You learn that when you meet the Italian business elite. The resilience is baked in, regardless of the politics, the geopolitics, the social, and the financial problem. We have to go.
Neither of you mentioned the food yet. Anyway, we'll leave it at that.
Do we need to? Do we need to?
Ozan Ozkurel with us, founding managing partner, Tanta Capital Partners. Coming up on the show, French Finance Minister Bruno Le Maire sounds the alarm on Marine Le Pen's National Rally Party amid fears for its economic plans. UK political leaders lock horns with less than 2 weeks to go until polling day as Prime Minister Rishi Sunak contends with another campaign setback. And don't miss our conversation with the president of ANCE, Giovanni, Italy's National Association for Builders, coming up at 9:30 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
French Finance Minister Bruno Le Maire has criticised economic proposals put forward by the far-right National Rally and other opposition parties, warning they could create further volatility in the markets. Le Maire and other party leaders were speaking at an event organised by French business lobby MEDEF, where they presented their economic plans ahead of this month's snap general election. Charlotte has more. Charlotte, I was having this conversation with Kristalina Georgieva yesterday about the impact of the populists and what that means for fiscal budgets, where we know in France there have been issues with that budget lately.
Well, that was really interesting to watch this exercise at the MEDEF, which is a traditional one during the election. Of course, because of the concern that we see on the market and the question of the public finances in France there, that's taking a specific focus during this campaign. And just the morning before these auditions of the leaders, the boss of MEDEF himself was speaking to Le Figaro, talking about how the program of the Rassemblement National and the Front Populaire, so the far right and the far left, are dangerous for the economy. And that comes after a warning that we heard from another association that's actually normally very quiet, one that represents the largest companies in France, that's called AFEP, that also pushed out a communique a couple of days ago talking about the risk of isolation of France and calling for budget responsibility. So this is very much at the core of the conversation of the campaign at the moment. So we heard from Jordan Bardella, the far-right candidate, who was actually sitting with Monsieur Ciotti, and that was very interesting to see that he wasn't on his own, because Monsieur Ciotti is the leader of the Républicain, the centre-right party, who broke away from his own party and saying that he wanted to make alliance for the far right. So for some, it showed that maybe Jordan Bardella doesn't have really the content, the ability to talk about business in particular. So he needed a bit of a sidekick there. So it was interesting in itself. But he's also been criticized for rowing back on some key promises, like taking away the pension reform. And he said, look, it's not our fault. It is because of the public finances. That's in a sense what Jordan Bardella said yesterday.
Dans un premier temps, ce sont les urgences.
In the first phase, we will introduce emergency measures. I mentioned the measure to lower VAT. That will cost 12 billion euros. Then also emergency measures on security and immigration. Later, in the autumn and for the 2025 budget, there will be a calendar of measures that we plan to take, taking into account the economic reality of the country. But it's very hard to ask a political party to come up with projections in just a few weeks and present, within a coalition and within a very restricted institutional frame, a political project it aims to roll out over the 5 years of a full mandate.
Now Bruno Le Maire, the economy minister, criticizing his opponents, saying, look, we had to spend money during COVID and during the inflation crisis, but we are reining things back now, while the other two parties actually want to spend more, so we are the ones responsible. And the reaction on the market is showing that.
For the
past 2 years, since 2022 and the re-election of the president, the spread between the French and German bonds hasn't moved. Since the economic programmes that are completely delirious and contrary to what the public finances need have been put on the table, the National Rally and from the New Popular Front, you all know that the rates have been going up, and you know that if they're elected on July the 7th, you will pay more for your investments and loans.
So it's interesting to see that the public finances have come very much at the core of this campaign, because to be fair to Bruno Le Maire, his opponents, when they were trying to, for example, roll back the energy price cap, the opponents were against that. And now they're actually criticizing the government for spending too much. We'll see how things have turned on their heads. But certainly you had the Commission calling for this excessive deficit procedure this week, and that plays into the whole conversation. You had that downgrade from S&P. You remember when that happened, you say, well, does it really matter? Yeah. And at the time, the market didn't move. Yeah. But politically, it mattered. And that's what is the heart of the conversation now.
And that is exactly what you said to us at the time. Yeah. Nailed it.
And that's what's happening. And so that's why we have to wait and see. Does that move the polls at the moment? Because they were talking to the business community. They might be receptive to this. The polls at the moment, they don't move. The Rassemblement National at 34% at the moment. The far left, 29%. Renaissance, the party, was at 18% at the beginning of the week, 22% last night. So maybe they are getting a little bit of momentum, but they're just 1 week ahead of the first round of this election, and it looks like things are still quite difficult for President Macron's party.
Oh, your job is so interesting at the moment. Fantastic. Thank you for the coverage. That's superb. And again, for saying about, again, the markets versus what it meant domestically on that ratings move. Spot on there. Well done.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.